Hello and welcome to Earnings with ET Now. We have with us Mr. Umesh Revankar, who is the Vice Chairman of Shriram Finance. The earnings came out over the weekend and NII was up nearly 10.3% and profit after tax was up 11.4%. Mr. Revankar, to begin with, sir, your net interest margins. It was expected that you will inch up in Q2, but now you're guiding that you will hit 8.5% while exiting Q4. What is the reason behind that?
No, I think we were consistent in our guidance, and even the last quarter call, we did mention that it is the exit of fourth quarter. It will be touching 8.5. See, let us understand one thing: this transmission of the lower cost of borrowing, that's happening over the period. It's not happening immediately. And also, 87% of my borrowing is in the fixed cost. Only 13% is the floating. The floating is the one which will come down over the period. The fixed one will change only when I replace it. So it happens. Normally, it takes around 18 months for the total transmission. And we are confident that over the next 3 to 4 quarter, transmission will be complete.
Sir, one of the key things which the street was watching out for was the liquidity position. You still have a high liquidity position at a high cost, and you just mentioned that you're trying to bring down the cost of funds over a period of time. Uh, by when do you think this unwinding of high cost liquidity will happen? Will it happen completely by Q4?
No, see, if you look at my numbers as on September end, our liquidity now has come down to 3 months of the liability. In the sense, earlier it was 6 months. From 6 months, it has come down to 3 months. So it has already come down. But the only thing is, it has come down in the last part of the September, that is second half of September. So it is not visible. The impact is not visible. But third and fourth quarter, it will be visible.
Mhm. And if that is a scenario, will the guidance of 8.5% net interest margin, can you will you be able to hit that or that mark closer to the end of Q3?
I can't comment on the same because the repricing, depending upon the cost of the repricing, which we are working out, it may happen, but we are guiding on the fourth quarter exit.
How do you see the CV segment, sir? Means we've been seeing some sluggish growth coming in the segment as a whole. From a lending point of view, how do you see that segment?
Now, if you look at the numbers have been good. If you look at the first half of this year compared to the previous year, the CV segment has grown, especially LCV has grown by nearly 9% and heavy has grown by 6%. So that is a good indication that demand is good in the market for the commercial vehicle. And the October numbers also have come. October numbers have shown that overall LCV and heavy put together is grown by nearly 9%. So I think the market is still positive, growing, and demand is quite good.
Mhm. On the MSME front, you have, put out a cautionary statement saying that there is a stress which is coming in that segment, especially with some of the companies which have exposure to the US. How do you see this segment? Do you have exposure to companies which have exports to the US, and that's why you are, sounding off for this caution?
See, we are cautious because it is a entire ecosystem of MSME. The people who are involved in manufacturing, servicing, export, there are multiple people and agencies who are involved. So if the US tariff is going to impact them, then it will impact the ecosystem. Even though our exposure is very minimal, especially some units in Tamil Nadu and in Andhra Pradesh, we have a small exposure, but our ticket sizes are very small. So it will not have a major impact for us. But the growth in MSME segment will be sluggish. In the sense, credit demand will be, because we will be cautious to lend them.
Is there any other segment which is looking such which is facing some stress aside of the MSME?
No, we don't see any other segment, especially CV and passenger car two-wheeler are doing very well.
Mhm. Also, sir, if you could take us through some of the other segments, like consumer lending segment, do you see? Have you seen a pickup happening in October or end of September?
So there's a significant improvement in two-wheeler and passenger car because passenger car, if you look at the first half of the year, sale was degrowth, showing that there's a degrowth. But in October, there is a big growth. So and also the growth is in the base models. That means there's a fresh aspiring new customers are coming in to buy new vehicle. That is a good indication that demand is good. And two-wheeler has been very good for us. Two-wheeler financing has been very good for us. I think we have hit all-time high in October in a single month. So the numbers are yet to have final numbers yet to we get. But the October is the indication that that November and December can be equally good. May not be November, but December exit of this calendar year, demand should be very good.
What are you doing to reduce your cost of funds, sir, and what is it currently?
We are at around, there is a book cost and incremental cost. The book cost is around 8.83, but incremental borrowing cost is around 8.2. So as we are able to raise more resources, reprice now, then the cost will come down. We are hoping that further borrowing cost will come down to, incremental cost will come down to around 8, and the overall cost of the book will come down.
Mhm. And how do you plan to do that, sir? Are you looking at low cost debt or are you looking at equity as well at some point in time?
See, market is good. One, we have reduced our deposit interest rate from the last quarter. That will have a good impact on us because the deposit is today around 27, 28% of my total liability. The reduction in the interest rate for the deposit will have a major impact. Plus, the bank borrowing also will be coming at a lower cost, including the securitization part of it. Overall, we are confident of reducing the borrowing cost.
Are you looking at raising fresh capital or equity in the near future, sir?
So we are at more than 20% CRAR now. We are not really looking for any equity infusion now.
There is a market talk about of Japanese bank looking at some equity infusion in your company. I just wanted to ask you that is that true or is there a discussion ongoing on this?
See, any bank or NBFC will be definitely looking at various options of raising resources. And that is a continuous progress because it is the what you call the basic raw material for a finance company or bank. So there will be some discussion going on, but I cannot confirm anything now.
Mhm. Sir, you're also undertaking some structural changes with respect to the governance structure. We saw the MD, stepping out, Mr. Parag becoming the MD and CEO from December. Any reason why that changed? Because that came as a little surprise. The expectation was that his tenure may be extended. Mr.
Yes.
Chakravarti.
Say, Shriram has a strong senior management team, and we have a succession plan. And that is a well planned one. So it is not a surprise, and it was always there as a plan. So we have enough senior people to replace and succeed. And that's the our stand.
And you're also bringing in two structures where you will have a COO for your commercial and a retail arm. Will that be as part of the new structure that will that help in focusing on these two segments specifically?
Yes, we feel that as we grow bigger, we need a focused, what you call, attention towards each of the products and segments. And therefore, we felt that bringing in people who are in their field, who have built the business to come into the central structure will help us in running the business much better. Both of them have experience of more than 30 years in the Shriram and their respective product mix, and therefore they come in with a lot of ground level experience, and that will help the management to run the business better.
Also give me a sense of your gold loan portfolio. There's an increase in that GS3 and GS2 level there. And you are off as of now. You're not doing anything because the contracted price is much lower than the current market price. But how do you see this entire situation evolving?
See, when the LTV is very low, in the sense, if my asset value goes up and if there is no immediate challenges, we do give some time to the customer. It is always, we don't want to make the customer lose his assets. So we do give some time. So that's the only reason. We have been always like that as a company, being more I should say, empathetic to the customer's challenges. And we are in touch with customer, and we don't see credit cost going up. What's more important is credit cost, not the GS3 or GS2.
That's true, sir. You've been able to hold on to your credit costs in this quarter, and and is that going to be the same outlook for Q3 and Q4, given the kind of you have laid out that there is stress which is there in MSME on gold loan portfolio. You're not taking any action as of now because you're in a comfortable situation. But is there a possibility that these things can have some kind of credit cost impact in Q3 and Q4?
See, credit cost happens when our realization is lower than the asset value. When the realization is higher, then there is no credit cost. It doesn't add to any increase in credit cost. So we don't expect any increase in credit cost in Q3 and Q4.
Yeah, and finally, sir, your retail expansion, are you looking at expanding retail or it's more of a consolidation and getting cost efficiency in?
Cost efficiency is always the matter. We'll keep looking at it. We are now introducing a lot of digital assistance in our business that will increase our productivity. And that will also help us to increase the productivity of executives and the operations. So that's what we are focusing on. So we will see less addition of manpower in the bottom line and increased digital activity going forward.
Mr. Revankar, it was a pleasure talking to you today. Thank you very much for joining us on ET Now today.
Thank you.